Ever feel like you're watching the market move and wondering, why did the price suddenly move so strongly? Or how did I miss that turning point everyone else seemed to catch? You're not the only one. Many traders get frustrated when it seems like the big traders know something we don't. In this video, I'll show you a tool that helps you see the hidden areas on the chart where these moves often start. At the end of the video, you will also be able to open a position before a major move in the market happens. This might be exactly what you need to take your trading skills to the next level. First things first, load up TradingView. I'm going to be using this platform throughout the video. I will be using GBP/USD on a 2-hour time frame to explain this indicator. This is just for example. You can use any asset or time frame you want. To add the indicator to the trading chart, open the Indicators tab from here. Type in Multi-timeframe fair value gap, or just FVG. It's the one created by Simon. Click it and you're good to go. Once it's on your chart, this is how it will look like. Now listen very carefully. I will quickly go through the major concepts that you need to know in just 2 minutes and 50 seconds. So first of all, you'll see these colored boxes marking out what's called a fair value gap. Basically, these are price zones created when the market moves so quickly it leaves a gap behind in a 3-candle sequence, like it just skips over price levels. Institutions love to use these levels. Price often comes back to these gaps to fill them, making them great areas to watch for reversals or continuations. What's cool about this indicator is it doesn't just mark FVGs on your current time frame, it pulls them in from any time frame you want. So you can see a 4-hour FVG on your 15-minute chart without flipping back and forth. That's thanks to how it's coded to grab that extra time frame data and plot it right on your screen. Saves you so much time. The indicator is also smart about filtering out noise. It's not going to plot every tiny gap. Instead, it uses a wick sensitivity filter to make sure only strong, impulsive moves show up. This is big because you don't want your chart cluttered with dozens of irrelevant gaps. You want the ones that actually mattered because of real buying or selling power behind them. Speaking of power, one of the best features here is the buy and sell effort visualization inside each FVG box. This is next level stuff. Instead of just seeing a price gap, you see an estimate of who really is powering it, buyers or sellers, and how strong they were. It's like peeking under the hood of price action. So if you see a bullish gap that was actually formed with heavy selling pressure inside it, that's a warning. On the flip side, a bullish FVG with clear buying effort is way more legit. It helps you avoid traps and false confidence. There's also a handy table you can enable from the settings. This thing is great if you want to track multiple gaps at once. It shows you every unmitigated FVG still active on your chart with color codes and timestamps so you know when each gap formed. You don't have to go hunting around or zooming out trying to remember where that old FVG was. It's all in one spot, constantly updating. Now let's talk about the trend filter, because this is another game changer. It uses a Butterworth smoother. Don't worry about the math, but the idea is it gives you a clear trend signal derived from the FVG data. If it's pointing up, bullish FVGs are stronger signals. If it's pointing down, you pay more attention to bearish ones. It helps you avoid taking every random gap that shows up and keeps you trading with the flow. Now let's talk about the settings real quick but thoroughly so you actually know what you're working with here. This indicator gives you a solid amount of control, and that's one of the reasons it's so useful. You can open the settings of the indicator from here.
Do you feel like everyone around you benefits from artificial intelligence but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
So let's quickly go over the settings so you know how to use this tool. First, you can choose the FVG timeframe. This means you can see gaps from any time frame you want, even if your main chart is different. Next is sensitivity. This controls how strong a move has to be to count as a gap. Higher sensitivity shows only the big, clear moves. You can also choose how mitigation works. You can set it to count as filled when price closes the whole gap or even just touches the midpoint. Then there are style settings, so you can change the colors and how far the boxes extend on your chart. There's the FVG table you can turn on or off. It shows all active gaps with clear colors and times, so you don't lose track. Finally, there's the trend filter. You can switch it on or off and adjust how quickly it reacts to changes. These settings let you customize the indicator to match how you trade. All of this lets you tailor the indicator to match your own approach perfectly. Whether you want just the big, clean institutional gaps or you want to see all potential imbalances, you can set it up exactly the way you like it. For example, here we can spot a fresh bullish FVG box forming after a strong move up. The trend filter line is sloping clearly upward, confirming overall bullish momentum. Price starts pulling back and taps right into the FVG zone you've marked. But here's the key. Inside the FVG box, those buyers and sellers power bars show strong buying effort, way heavier than selling pressure. That tells us buyers really drove that impulse. As price tags the FVG and prints a bullish candle with solid volume, that's your cue to open a buy position. You'd typically set your stop loss just below the FVG box's low to give the trade room, and you can aim for a risk reward of 1.5 or 2, maybe even targeting the recent swing high. By waiting for that confluence, the trend filter up, price tapping the gap, and internal buying pressure, you're stacking the odds in your favor instead of blindly buying every gap. If you see a bearish FVG box appear above the price, that's a sign the market might go down. You wait for price to move back up into that box. When price touches the box and then starts moving down, that can be your chance to sell. The gap here acts like resistance. Always remember to check the trend filter if you use it. If it's showing an uptrend, bullish gaps are stronger signals. If it's showing a downtrend, bearish gaps are stronger. This way, you're looking for clear levels where price might react, giving you simple, planned entry. So in practice, you're using this indicator to spot those institutional footprints, places price might return to, areas that act as strong support or resistance. You're not blindly buying every FVG that shows up. You're checking the trend filter. For example, look over here, we have FVG showing strong buying pressure. But we will not open a buy trade simply because of this, as we can also see the overall trend is bearish. We also have to see the buying and selling power inside the gap, but it should align with the overall trend. It's one of those tools that adds context to your chart so you're not trading in the dark. And of course, none of this is financial advice. This is all just a breakdown of how the indicator works and how you might use it. Trading has risk. You need to test, plan, and manage your trades smartly. But if you're looking for something to help you see what might really be going on behind price moves, this indicator is worth a look. If you found this breakdown helpful, leave a like or consider subscribing. I'll be posting more guides like this to help you level up your trading. Thanks for watching, and I'll see you guys in the next video.